Well, good afternoon, everyone. Scott Henderson, shooter. It is October 1st. We're going to do a quick town hall meeting, review some stocks, charts, see where we're going. Of course, at the end of this presentation, please do review our disclosure. Okay, so let's start off with the NASDAQ. At this point, it looks like we are going to continue to head higher. I think we get a little pullback, just like I spoke last week. We see this little push, as far as a shallow one, I think we get a shallow 5 up here. The SPY or SP 500, it looks to me like we have a very similar. The one thing when you have these elongated threes and shallow ones, they typically have that similar pattern on the right. So I see the same. Now, one thing that we really haven't had a pullback. I mean, we got this little pullback here, but nothing like any of the pullbacks in 24. Notice how much broader these all are. We don't have this here yet. So I think we do get a pullback. And, the optimum zone is going to be back to about 629 at some point. So, that is kind of my thought. I can't tell you if it's going to be here or here, because at this point, the buyers just are relentless. All right, now I want to look at the Dow. This has the largest potential pullback. However, it's still fairly bullish. In comparison to the S&P 500 and the NASDAQ. I think we're right. The 618, I don't know that we get above, we're hitting that resistance, didn't quite tag it, wicked off on that. And one thing that the Dow doesn't like to do is wick off on its tops. I mean, here we got a decent one, here a little bit of one, but on the high highs, it doesn't necessarily wick. So that implies to me we might break through that 618, just looking at the MO of the tape. Now, right now we have 240 puts open on IWM. Reason it's the weaker of the sisters. Right now it is not playing out, at least from a shutdown. We haven't heard the bad news yet. I think when we get the extended time frame for the, how long everything's going to be closed, or if we start seeing massive layoffs, that'll be a different story. But I suspect we get a minimum pullback in the Russells, I think, to 229. So we're out in November's. All right, let's start going through some names. Now, Symbiotic, the preferred is a buy right, buy to open common shares and sell the November $53 to $55 calls. You're going to find a lot of the setups I'm going to take in year-end here are going to be premium based. So if I can get the premium and get more than a 40% yield, that's where I want to be. You could also sell to open the November $50 cash secured puts as an alternative. But right now it is working from our entry because basically we were right off of this 54.91 where we're at. We're already up at 58 bucks. So it just absolutely ran. CELH did the same thing. It's pulled back just a little bit. We had a breakout trigger right here. It's tested that. So I do believe that holds. I think we head towards that 618 at 69 bucks. The preferred option or the preferred plan is buy right, buy common shares, sell the November $60 to $65 calls, or you could sell to open the November or December $60 to $70 cash secured puts. Now there's a huge gap down here as far as the buy zone. This just is like textbook where we pulled back to, which is why we had this euphoric bounce. So we want to watch getting above 60 bucks for any kind of rejection. If you get any kind of rejection, I would take profits and move on. That would just be my 2 cents. Duolingo. Now, my understanding is that there is a huge section in the world where everybody's learning English because now the apps can help them learning. Duolingo is not necessarily used by Americans for other foreign languages, but it is used by foreign nationals in other countries to learn English. And the original thesis was that, Trump's requirement, for example, there's 60,000 truck drivers who don't speak fluent English, who are going to have to learn English and pass an English test, or they're going to lose their privileges to drive as a truck driver. So that on top of the AI structure that they seem to be implementing, they're doing these repetitive, like interactive videos for learning languages, and they're working with AI now. So it's sort of got an AI spin to it. So I like this as a buy right. Kirk didn't like this as much because he really thought it was sort of dwindling, but I'm totally on a 50% back base. I think minimum it returns to 387. So buy the common shares here or scale into common shares. I think the risk is probably that 293.94. It breaks below there, then we're back to the buy zone. I don't know that I would hold that heat. Now, PAX, really just testing the breakout. We should expect some kind of resistance here. measures to 29.67. So again, this is a buy right, buy common shares, sell the December $15 calls. Nice premium on this one. Or you could sell to open the November, December 12.50 cash secured puts. And then look at Visa. We threw this into chat because it alerted as far as a buy. I think we're heading back towards about 375. You know, the wedges resolved more than, it's like 72% of the time back to the upside. So, you know, obviously that gives us what I think is an advantage or a tell in the trade, because you know we're measuring an inside breakout. So now we need to break out above this next ledge really for confirmation of the move, which you know it already has. So you know in that scenario it's confirmed. As long as it stays above this 345.28, then you know we should continue to the upside, and I think minimum is going to be that 366 back. Now we also threw run into here. Now it triggered this morning. It's already wicked off here pretty good. So the target on, let me go out to the weekly because this was the larger picture. You know, a lot of these solar companies are doing this. They're wicking up and then they're rejecting. So we want to see how this really absorbs price here. If we get a weekly red candle, I would probably pull in one run and wait for the back test because we're not going to confirm until we're back above this 22. But it does target this 26.29. So structurally, I mean, it's done nothing wrong. MACD is pushing to the high side on the weekly versus the daily. It's not as spent, sort of basing towards the bottom. We look at the different time frames. All right, let's look at OfferPad. Really gone nowhere, but this is a similar look to Visa. So if you know we're looking for our breakout line, really we don't want to take our inside line where our bodies are. So you know our entry alert here would be right here. Obviously you guys can set that if you want to. It breaks above that, you know, then it's opening up the upside back to around this 61.8 at $7 to the upside. I think this is a candidate simply because they're a unique seller of real estate, and it's when the normal realtors have failed to sell the property. So you can buy the common shares, sell to open the January 750 covered calls. It's about a 94% annualized, which is a nice yield on that. Now BBIO, it just ran from our entry here, so I'd raise our stop. If you haven't, I'd go up to the gap. Want to try and hold that gap here, tighten it up just a little bit, and I think we head back towards this 58.32, especially with the look at the tape here. Even though we're winning, we had this pullback here. So you know this is a squeeze look in RSI here. So I'm thinking that, you know, we could get pretty euphoric. I mean, we could have another 2, 3, maybe 4 candles and we're up to, so we could be here by next week, back up to this $58. The way it's moved off of 50 already, it's got that euphoria to it. But buy common shares, you know, roughly I noted below 55, sell to open the November 55 covered calls, roughly about 445 a contract. Obviously, that was when I drafted this on this past weekend. That was a 42% annualized at that point. Now, Joby is another entry point. You know, really is done just continuing to build this flag out. I think we're going to target back up to this. You know, again, this is one I like for buying just common shares and holding, 1, okay, or 2, buying common shares and making it an income play. Sell maybe the November 17 covered calls, about $215 a contract. That should yield about $64. Now Archer, same scenario. It's ready to buy again. I expect it to break back above this and head towards this 618 around 1160, and our extended move, so measuring the cycle from this trough to this peak down to this trough, measures up to about 1388 at the 618. I think both are very viable. I think it actually is going to take out these highs the way it looks. And this is in, can't tell you how many, but it's quite a few of the different certified market technicians and other pros that I follow. There's a lot of buy alerts on this at the moment, and you know that does nothing but help support it. It's always better when I find them first. I always like because I think we were looking at this at 875. All right, so looking at Fortnite, it's still done nothing wrong. You know, whenever we have market noise, you know, my risk management supersedes any position. So how I manage my book is very stringent. When the market is bullish, you will see me get aggressive. When it's not, I'm sort of just meandering along because I don't want the risk on the table, because experience has shown to me that's not necessarily the most prudent way to do it. But Fortnite, I like the November 90 call. calls for roughly 450 or the December $95 calls. The reason is because of the open positions that are there. However, there's quite a little bit of risk that, if it breaks below this 81.83, I mean, I'd probably be trimming as far as that position, but I don't know that it does. I mean, it's, volume is pretty strong. When you have these large volume candles come in, especially off of this gap, and then it's followed up by a second one, that's kind of a squeeze. So I would think that, see this look over here, we kind of had this same look, kind of had that same kind of, squeeze kind of look, and then we just ramp, as far as this look on the tape. So that's my thinking. All right, let's take a look at, all right, PFE just popped off of this government shutdown. Matter of fact, a lot of medical. However, I'm hesitant to chase that. I'm hesitant because as soon as the government shutdown lands, what's the most likely outcome to this stock? It's going to back. And you know what this is the flight to safety. So at this point, I have a real hard time chasing it, even though we're looking at a breakout overhead. Now I get some kind of back test, and this imbalance holds right here, breakout imbalance. So we get a back test to about 50%, so about 24.94. That holds, and we get some decent divergence. We are confirming, so it is going to put in another high. Up to you whether you want to chase that risk with the potential for news, but I would say that we're definitely heading higher. Now, hopefully everybody is managing their risk with uranium. We have, I don't know if it's the dynamics have shifted in commodities. I'm still in the thesis that we have a commodities bull market, and I don't see it waning. Problem is China's not buying. Just like corn has been absolutely annihilated. China hasn't bought anything. And normally, the farmers are tilling their crops because they can't find buyers for their crops. So the only way they get crop insurance is to roll it over. So, we break below this ledge, I would take my profits and run. You should have a decent profit in from our entry. However, I'm still targeting that 58. So I don't want to say cut here because this is a pretty solid looking flag in URA. And as long as I'm doing URA, let's look at UUU because it's the same topic. It's come off a little more aggressively, but it was also more aggressive to the upside. Right now it's holding this shelf. It breaks below this shelf. I would probably take my profits and run and wait for the next shelf at 1231 to enter back in. But equality, if this is our impulse, just looking at, depending on how you measure this, flat, peaking drive 1, peaking drive 2, peaking drive 3, 61.8 back is 922. So it could pull back. So of course, based on your risk model, of course, make sure you manage your risk on this particular name because it could roll over. It's too euphoric to the upside, so it's likely to be just as euphoric to the downside. That's my take. However, I'm going to bring in my speed line scenario, which is one reason I like the speed line so much, because it gets us out. Now, granted, if we had entered from down here, we would have probably gotten kicked here, right? Then it broke down. As soon as it broke back out, we would have re-entered long, right? And it would have kicked us out if you were continuing to push up to the base of your body of your candles. On this wick up and you pushed up, it would have taken you out at 1683, and it would have been, roughly another $2 profit from where we are now if you'd used my original anchor thesis on how to manage. I know it's a little more work, but I guess it depends on how much you want to profit as far as how you trade or how you swing. And realize swing trading is no different than intraday trading. Now, if you're doing a position trade kind of thesis with a stock, that's a different story. Okay. Then you got to realize that you're scaling in. So, you understand where your buy levels are. So if you've bought at 10 and you're going to wait for the back test, you'd add at 12. If it pulls down lower, your next add point would be down at 968. So let me find where I'm supposed to be now. BTU. We have a lot of names. This just is gone from our alert. I mean, just blew out. I would raise my risk. I don't know if it's been a benefactor from the shutdown or not, but this thing just has not slowed down since we put it out. So I'd raise my secondary anchor to that 2668. All right, now Merck. Again, this is another name that I have a real hard time chasing here just because it's moving totally on the FOMO of government shutdown. And part of the reason is because their capital doesn't stop. Medical support doesn't stop when the government shuts down. That's one of the exclusions versus where defense contracts are delayed. So the longer we prolong this, the more defense is going to get hit. However, from when I looked at earlier, it hasn't been hit. So that's my thinking. I like MRK back at 80 bucks. Now remember, I started talking about Merck, how I liked it off of this breakout here, down here. If it got back above that, so on that breakout, I don't know whether that was 6 or 8 weeks ago, but that was about the timeline, just because it was a nice base, nice divergence. I mean, we had a nice structure down here, higher low. Just there were a number of things that I really liked. All right, now Google. We are very euphoric here. The main buy zone, this is way the heck down here at 180. We could lose this gap here because we've lost this gap here. And realize a stock has an MO, and God knows how many times I've said that. But Google likes to fill the gaps. It's filled every single gap here. Gap fill, gap fill, gap fill, right? Gap to the downside, gap filled it, gap to the downside, it filled it. Didn't quite fill the gap here. Just close. Didn't quite fill the gap here, right? Filled the gap. So pretty much on every gap, gap fill, the MO of Google is it likes to fill the gap. So I would say there's a very high likelihood that we fill this gap. Problem is that we really only have this buy or sell side imbalance that really comes in about right here. And what that means is that's where sellers dominated the tape. So that's what they're likely going to do again. So we got the sell side imbalance here that is the most likely place for us to retrace to. If that holds, we're probably not going to get to this buy zone and we'll have a good bounce. But I wanted to review that because I see that. So covered calls are probably good here on Google. If it gets back above this wick at 251.76, I'd cut and run on. All right, then I wanted to peek at Roku because it's just, and I don't know why we don't have a position on this. It's going to break out here. Let me go out to the monthly on this one. I didn't actually work this chart up, but I've got it noted to share. 61.8 back is up at 164. This is a huge pullback. Now realize I'm just measuring this leg. I'm not measuring. Now I don't know that they're going to recover that much. That's, I want to avoid saying. But this is just a huge trade. I mean, this is a total reversion to the mean, whatever reason it was. And it's got some huge upside. It's got 317 written all over. Back to the upside. This thing can build a base and get back to a launching pad, or somehow or another, they can build a business around AI something. They need a catalyst, so I think, to get back up there, but potentially break on. It's a good position to sell cash secured puts on. That's what I wanted. All right, now AMD, I like it here. Come back down to my daily. I think I have it set up on the daily. Maybe it was on the week. No, I don't have my targeting on there. My goodness. So measuring, just a quick look on our trough. So we're going to measure back to probably the 618. And I'm doing this now because I'm technically correct in measuring to the 618 versus my 50% back. So an extension on this would put us up to the 1618. In other words, this has room to go. AMD's got to catch a bid on this AI more than it is. I don't know that it will. I don't know that it has the tech yet. That's my only hesitation here. However, if I was going to chase a nice, hit right to the base of the shelf here, that's what caught my attention on this. So this would be my stop straight up. You could use a confirming trend support line as far as an anchor if you wanted to do that. Basically gives you the same number if you were going to do that. Your anchor levels in that case would be this 1676 and coming down to this wick here at 149.85. But I definitely like this as a playback to the upside. We've got a little bit of a pullback. It's a good spot to sell covered calls, and we'll draft something up for that Friday because this was something I was going to add to swing trade notes. Now, team, I've got two dominant buy zones down here. Now it's broke below this ledge here. I think it's going to come down probably this shelf. So I think 128. I still like it. I mean, we're going to get a bounce here. It's just technically that's what's going to happen. It's just a matter of when. So, at this point, I would wait to enter anything on team just for that reason. I still like it though. All right, let's go to the requested name. MP. Okay. We got this sell side imbalance, nice ABC corrective pattern. Looks to me like we're going to pull back to maybe 60 bucks. So that really is the buy zone, except for there's nothing there because we've taken all this out. This imbalance, we've already taken it out once, went below it. Right here, let me draw that box. So when a supplier demand zone doesn't hold, right? In other words, where we get a break below it, it invalid. So it has no strength once it breaks. So that is gone at the moment. However, what we do have here is we have a sell side imbalance, which we need to get back above because this really is now where our resistance is a sell side imbalance. So that is what we need to get back above for us to really hit that 91. It's still targeting 91. Nice buyback zone is this 49. Now notice this sell side backs, huge sell here. One thing I don't like about NPs, it likes to sell. It does. Look at this push, gave back more than 50%. I mean, it's technically correct. It gave this push and gave back more. So initially we got peaking drive 1, peaking drive 2, peaking drive 3. It tends to be extended. So the way I see this is this entire leg here. So this is peaking drive 1, peaking drive 2. This is peaking drive 3. So we got the same kind of extension that we got here, but a little more euphoric. So the problem is, do we pull back to 38 bucks? So this low break, 61.48, I would cover and move on. That's my 2 cents. All right, NEE. It's at a buy zone, except for we got a lot of sell side imbalance down. Got some huge sells on this tape, huge sells. Look at these sells. Look at this sell side imbalance up here. There's so much resistance and we're right there. So what is the most likely outcome? Without some kind of macro or micro thesis as to why this is going to move, most likely retraces back down to 63. However, I can't fault you for wanting to chase it. I would just stick with cash secured puts, probably about 65 bucks, give myself some room just for that reason. That's my 2 cents. It's just a dirty tape with these imbalances. They're too aggressive. I mean, we have bullish moves, and we had a bullish move here, but a majority of the rest of the tape has this slow grind until whoever's cutting and running on this, somebody's playing with it. They're buying it, might be institutions, or it could be some large pockets in energy that are playing on this. Could even be a competitor that's trying to manipulate price. So let's look at copper. Now, we don't look at futures very often, but I see copper measuring up to about 12,386. This main resistance that we need to get over is this initial sell side imbalance here. It's kind of skinny though, so I don't know that it's going to mean that much. And we're above it at this point now, so we need to stay above that. But the MO of the tape is push above it, push above it, push above it, push above it, push above it. What do? We rejected, rejected, rejected. So it's a little hard to chase copper here. However, if we look at this breakdown, we look at the drive, this is peaking drive 1, peaking drive 2. So we should get a third drive, and this doesn't, drive 2 does not look done. So maybe we put in our drive 2 right up here around these tops, somewhere in these wicks, and then we maybe put in a third so we get a back test to this ledge. That ledge holds, then we get that 12K. So jumping over to COPEC, we're looking at a target here relative to copper of about 74.39. Extremely euphoric move. And this is why, one reason why I'm saying we kind of have this bull market occurring in metals, at least as far as commodities, but yet agriculture in the United States is getting killed. But if you look at agriculture coming out of South America and Mexico, they're booming because China just isn't buying from us. China's buying from everybody else. So that's our quagmire. So I think copper has much more upside from where we are. All right, looking at the Dow. Now, we drafted it before, and I had this number down here. It looks to me like we still manifest down here. Reason, if you look at the structure, here's wave 1, wave 2, wave 3. This is wave 4. Got it in. We're going to put it in wave 5. This could be done. We could be done. We break back above this wicket, 26 to 18. Then it's going to continue back to the upside, and that measures to 55 bucks. So there's really no significant sell side advantage on that. Nothing that's giving me a quick visual. I mean, we have a lot of sell side resistance to get through on the way back up. I mean, just this one, for example, is a huge number. It's up there quite a little bit, but we got this sell side imbalance right here. We do have a breakout here, which we need to get back. This is sort of our buy zone, which we're below, which is challenging because this is really where our buy zone is. So we're below that. It's not that I'm saying hands off. I just think there's a good possibility that we've already taken this low out. So that's good. So we do have a stop run that occurred here. But the fact that we're waning here with these wicks right here at this, that's got to get taken out for us to get. All right, NVO. Now, we also drafted this one up in the past. I like this 4106. Now, challenging part is, I measured all these legs as far as where the fibs would measure. And there's no symmetry to this. I mean, we have a little bit, but it's now appearing more like a bleeder. And the problem with bleeders is realize Elliott Wave likes 3 5s and 8. So when we get 5s, it opens Pandora's box and maybe we get to an 8. Well, an 8 is probably down around 10 bucks on this. So this buy zone fails. We're going down here. So be very cautious if you're going to try and chase them. Know where you're wrong, where you take them. I personally would not risk on this tape more than this low right here at, what is it coming in at, 52.76, just because of the look of this tape. I don't want to give it any room to the downside because the most likelihood is that it's going to take us out and we're going to head down to this 41 bucks. And I just don't want to hold 17 bucks to the downside in this market. All right, let's look at Caesar. It's actually a great spot, except for Vegas, it's dead. I mean, dead. Nobody's there. Nobody's going there, right? They're begging people to come. I've gotten over 20 emails offering me 10 grand in cash to come play. All right. And typically I get one every 6 months. So I think they're in trouble. I don't know that Caesars is going to recover from that with Vegas. I mean, their other locations might do well, but I don't know that we're done yet. I think with the market conditions, I'd like it much better around $6. This buy zone here. This is the biggest buy zone around 1583. However, I'm wrong. It breaks back above 3167. MTDR. Now, initially we noted our risk at 45.37. It's taken that out. You know, this is looking to be like a ending diagonal now, just on this particular leg. So notice how broad wave 4 is at this point. I would think the most likely thing is it breaks below this. I'm wrong on a close below 53.03. Once it breaks in this market, once it doesn't go in the direction that we think it should go in, we need to cut and run. That's just how this market is right now. We don't need to hold on to any whipsical dreams that it's going to recover. We just have to take the hit and move on. Next, Lulu. I like the look here, except for the fact it looks like a leading diagonal to the downside. We should get a bounce, but right now we have no signs of a bounce. Getting a little bit of volume, but it's not taking this candle out. It hasn't even taken out 50% of it. Now we have a significant sell side imbalance up here, right here at this range. Maybe I measured that on the daily. It's a difference with different time frames. So, you know, it's right up at this range. We got to take this out for us to get bullish. So I think this continues to the downside until, now I might chase it long above 50% at 176.6. Might, because Lulu is a good day trading, intraday trading stock. Actually pretty good. I think we caught a piece of it here short. I wasn't in it very long, but we did catch a piece of it. All right, let's look at Starbucks. Right now, the tape to me, I'm going to come out to the month, give you a big visual of this whole picture. What does this tape look like? Looks like a reversion to the mean to me. I think the most likely target is back down to the 618 at 50 bucks. I'm wrong. It closes above my entry alert here at 96.80. But it just looks to me like it's going to break down. It looks to me like we need a back test somewhere. And there's not a lot of support below. So when this gives out, it's going here to this imbalance. That's simply what it's doing. AMPX. Nice look. Peaking drive 1, peaking drive 2, and we're getting peaking drive 3. Then we should get a pullback. All right, if we get that, it should be something similar to this. And I'm just going to measure this, if that is peaking drive. So 61.8 is back to $5. So it's a 50% drawdown from here. So it breaks below this shelf. I'd be trimming or selling coverage calls, or I'd be cutting it. But at this point, extremely euphoric. I think it heads towards that 17.98. But we want to know when we're wrong and what we should do, a plan. We want to have a plan of action. All right, so looking at Lockheed Martin. Ironically, when I reviewed the shutdown in stocks, and we did a lot of stocks, looked at a lot of different things, Sentinel seemed to feel that defense was going to take a hit. Well, look what we've done. I mean, we sort of got an inside bar kind of thing right here at this resistance, but it hasn't slowed down at all as far as that's concerned. So, you know, I don't think that is going to change. I think we head towards that 538. I think maybe the defense contract, you know, by the way, I don't know if you guys noticed, but Trump, I don't know if he proposed to change the name of the Department of Defense to the War Department, you know, as a deterrent kind of concept. I don't know how I feel about that. I don't know that that falls in line with my belief of freedom and liberty. I don't know if it makes that sense, but let's not get political. All right, so, but I do think we head back towards that 538. Breaks below the body of this candle at 47.39, I'd be trimming or selling covered calls if I was holding. NAUI, New Era Energy, rough low, really is rough low. Simply being, you can't really assume that's going to hold with that many red candles. We're confirming, so we are going to get a new high. The question is, do we go back to $1.50 first? The floor of this maybe $1.48 before we bounce? That's the challenging part right here, because you had three generals. You come in and measure the bearish fib on this, coming off of your floor. 618 measures down to $1.22. So That's going to be a little hard to hold that, if we're going to continue to pull back. And the unfortunate thing here, I'm just going to take that piece off, show you. Realize every corrective leg is an ABC. So if this is A and this is B, what does C do? C takes out that shallow. I don't think there's any reason why we get a shallow C, just structure. Don't usually get a shallow C in this cycle or this section of a move. All right. So let me look at Unity here. It's flushing. I'm glad I don't have my calls. And the challenging part here is I see potentially a flush back down to the 618. We had our entry way the heck down here at 21. If you look at this is grouping 1, right? Maybe this is grouping 2. This is grouping 2, 3. So, I see this as a peaking drive, especially with this flush and the fact that we filled this gap. So the challenging is, does this sell side imbalance hold and we bounce? Which we could. It's going to be an important spot. But notice what RSI is doing down here. Let me just expand this, give you guys a better visual. Notice how it's pushing for the lows. That's a scenario where it overshoots the 30 because it's too aggressive to the downside. So the most likelihood is that it continues to the downside from here. So if you're holding, I would be selling some covered calls if you haven't already. Hopefully you did take some profits if you rode it all the way up from 21. But that's my look right here. Every time I think about that, I think about the bats that I used to have in my belt. All right, let's look at the weekly. Looks bullish here. Tight fib, 1618, 625 is viable. I would think that we might peaking drive too. It likes to pull back a little bit. Man, it is so hard to measure. I don't remember why these guys flush. Total reversion to the mean. My hand is getting tired, having a hard time clicking. That is such an extreme fib. I don't even like to show that. So the 618 is back up around 45. I don't know that we recover to that. That's the challenging part about looking at it that way. But it does look bullish. I mean, I'm looking at this as peaking drive 1. I mean, we could classify that as 1, peaking drive 1, peaking drive 2, peaking drive 3. We could. However, I'm more inclined to say this is what we're looking for is the euphoria in the push. We don't want a normal tape. We're not looking for that. We're looking for where buyers just dominated the tape. And what did we get? Now, the challenging part here is this is peaking drive 1 on the larger scale. Third peaking drive is probably going to be at least 625. It probably is going to measure a little steeper than that if we take our slope from, because realize as price climbs, it builds. So I would say the 1618 is probably definitely viable here to the upside. I would only think about selling some covered calls if we break below that 460, but otherwise I would just hold back to the up. Any other questions before we call it a day, folks? All right, going once, going twice. Great trading, folks. Until next time. Hopefully it was helpful, Robert. Good. Glad to hear that. All right, you guys, have a great day.